Hope you are well. It's Wednesday. It's not. It's Thursday. What am I talking about? It's the middle of the week, or towards the end of the week, and obviously towards the end of the. Just make myself a wee bit bigger. Towards the end of the month as well. Two trading days left until the end of the fourth month of the year already. End of April. So we've had a blockbuster day so far for earnings. Some big beats, some interesting misses. Carlsberg drew my attention. I don't know why Carlsberg caught my attention this morning, but they did. Deutsche Bank beats. AstraZeneca was a big beat. Barclays was good. Activision, obviously, we had this decline by the Monopolies and Mergers Commission in the UK to accept the takeover of Activision by Microsoft yesterday. Big moves in both their shares. Yesterday, Activision was down 11%. Microsoft was up something like 7%, wasn't it? Meta up 12% after hours. Big, strong return for the mighty Meta, as some might say. Amazon very much in focus after the market closes tonight. So lots going on. We have US GDP in about 5 minutes. We've got the price index GDP as well. That's quite key. Many people overlook that. Price also at the same time. And we got the weekly claims. They've been sort of gradually eking up over the last couple of weeks. So see what the weekly unemployment claims look like. And there was something else. Pending home sales, but that's not till later on. So let's have a quick look at the charts. This is the euro on the 15-minute time frame at the moment. So we've got support down here on that 15 minute. This is the 200 period moving average on the 15-minute time frame. There's support. We're right at that at the moment. 110.32 ahead of the data at the moment being support. And lots of you asking for stuff already. So let's have a quick look at what you're interested in. Manuel's asking about the Dow and the S&P on the 4-hour time frame. So the Dow, both of them, it's the Nasdaq crawled out, ground out some gains yesterday. The Dow and the S&P were down yesterday. So this US 30 chart, this is the 1-hour time frame. There's a 4-hour time frame and weak, being weak from this time break here. We've been under the 20 period. We've been under the 50 period back here on the 20th of April, so it's still declining. We rallied into it, or we went sideways when we bounced into the 50 period. It's been under the 21 period here from, what was that? That's the 25th. Where are we? That's 2 days ago. We had 2 weekdays, so we moved down yesterday. We moved a day before, and we moved down again yesterday into 32,000. 280. This line we've got on our chart here. The 200 period here on this 4-hour time frame, Emmanuel, is next big support, which sits at 33,075. And we've ticked up a wee bit today, but it's still negative. The 21 EMA sits there at 33,585. Excuse me. That line is on that chart for a reason. So that's down. And similarly, the S&P 500 is in a very similar setup. With my S&P 500 on here? I've lost it. Where have I gone? There we are. This is the S&P 500 on the futures. This is the futures chart. But if we go to the 4, you can see that it's the 1 hour. You see it's been declining for a few days now. Big sell-off. If you look at the daily time frame, you can see that thing I've posted up on Facebook and on my Twitter account as well. Big rounding top here. This rejection of 4175 on an end of day basis, just like we couldn't do it here at the beginning of February. We've done the same thing here in the middle of April, and it's rolled over quite significantly. Big down candle here on Tuesday, breaking the 21 EMA, crossing moving average, short position trigger there just before 4100. Down day again yesterday. We've bounced a wee bit today. There's that 40-50 level at the key 50-day moving average as well. So they're the big lines in the sand. We've retraced a wee bit today. As far as your 4-hour trading time frame is concerned, Emmanuel, still short, looking to turn around. The data has obviously come across the post. The stock is starting to tick up a bit here, so it suggests it's a bit of a weaker euro dollar. But let's have a look at the calendar, shall we? There's the calendar today before we press on any further. So GDP, initial claims have come down. That's relatively positive. Let's go through these. So continuing claims are weaker as well at 1.858 million. That's below last week and below expectations, so that's good news. The 4-week average is down to 236 from 240, so that's also positive. And the ongoing claims, the initial weekly claims at 230,000, it's still very, very tight jobs market. So all we eked up over the last few weeks, we've come back down this week. Domestic GDP on an annualized basis has missed quite significantly, coming at 1.1%. The wider mark of it, less significant. The annualized, they do it on a quarterly basis, and then the annualized is all a bit strange in America. But that's coming at 4%. PCE expenditure 4.9%, so that's a bit heavier. And consumption prices is 4.2%. So that's also a bit heavier as well. So the upshot of all that will or should be a bit of a move on the dollar. This is the S&P. Let's have a look at the quick dollar index. We got a bid on the dollar euro here. Has moved down initially. Let's have a look at these 5 minutes. That's a 5-minute chart. So continue to move down. So it's a bid for the dollar. So the euro's come off. It's big. Well, it's in a strong, relatively strong uptrend here, euro against the dollar. The 20-day moving average is all the way down here at 109.35. But as far as the reaction to the news is concerned, today, that's my calendar. There it is. With my calendar. The reaction to the news is concerned, it's better for the dollar. So there was some beats there for the US data today. Principally, that I know GDP grabs a lot of attention, but it's the second reading of it. But really, that initial claims as well is quite a significant decline from. Let's just put that back on there. Quite a significant decline that from the 248. Looked like we were going up to 250, potentially 260, but 230. It's a good move back. So it's looking like we've got this continuing tight jobs market that puts. Virtually nails on the 25 basis points from the Fed next week. Remember, the Fed meet next Tuesday and Wednesday. 3rd of May is the announcement of what they're going to do. Looks like it's going to be definitely 25 basis points. But that really isn't the issue. That's sort of priced in. It's what they do beyond that. Will they go again? The jobs data is saying, well, it's still a very jobs market. So if you're really focused on beating this auger that is inflation, as everybody has been talking about, they perhaps will need to go again, whether it's June or July. So we'll see how it all pans out. But dollar's back in the saddle a wee bit here. Sorry, let's get rid of me. Bring the chart back up. This is the euro, obviously in the 5-minute chart, but here 110.35 is where we trade currently. It's been drifting a wee bit low all day as well from that big spike. This spike up here at 110.86 yesterday, just shy of 110.90, and obviously that then brings in 111. This takes us all the way back to March 2022. So we're at a 13-month high euro, and it's continued to eat gains with the expectation that the ECB next week, remember the ECB have their rate announcement next week, there's still chatter of a 50 basis point from the ECB next week. General consensus is a 25 basis point from both the ECB and the Fed next week. But there seems to be expectation that the ECB have got further to go, and they're not going to. The Fed will be pausing for the ECB and certainly the Bank of England. So we'll see how we go. 110.20 for the euro to the downside. S&P 500, which is what you were asking about, Emmanuel, before that data came out. Let's just go back to that. S&P 500 here on the 4-hour time frame remains weak, declining. That's the 200 period moving average at 40.72 or 40.73. Bounced off a wee bit in the last few candles, but remains well below its 20 period moving average and its 50 period moving average there. That's 4144 for the 50 period. And to turn this move down, we'd want to break that above that 21 period there at 4115. Let's call it 4115 to move to the upside. But that's still short. It's seems to have turned around. You may have turned out close your stop losses, but that is moving lower. VJ, how would it affect the market today after news? Well, as you say, the news, VJ, is very much sort of relatively dollar positive because we've got this stronger continuing claims, stronger initial or better initial claims. So that's adding to the emphasis that there's still a very strong, robust jobs market. Remember, next week, obviously, it's the new month, and therefore we've got ADP, we've got the weekly claims again on Thursday. Remember, these are every week. And then the more important, well, as far as the market's concerned, as far as many traders are concerned, the more important non-farm payroll next Friday. GDP number, that's significant down mark, isn't it? 1.1% compared to 2% and 2.6% last time for this annualized number. But so mixed across the numbers there from that GDP number. Don't get too wound up on the GDP number. Remember, it's backward looking, so PMI data forward looking much more relevant, to be honest. But that is a significant miss. Don't get me wrong. But say euro continues to weaken a stronger dollar there. Sterling, have a quick look at sterling. It's been all over the place a wee bit as well today. On the announcement from Goldman Sachs earlier that they thought 5% could be the top for the Bank of England. 124.45 for sterling. Let's just have a look at yen as well. Dollar yen back to 133.85 brings in that 134 level. So let's get back to your requests. Good afternoon, Forex Signal. It's interesting, Forex Signal. Forex Live, Forex Signal. The DAX, sorry. I've got the DAX here. Let me go to, I know where I've got the DAX. That's what I've got the DAX here on the open slide here. Where's my DAX? My DAX 30. Oh, pick it, choose. Yeah, yes, 30. So time frame Forex Live. Well, it's been down to test this 15,007. Big key psychological level, significant level 15,700. Yesterday, for a few hours earlier, late last week, also on Friday, we went into 15,700. 15,700 yesterday. Again today, we've bounced off that. We're moving higher at 15,825. So here on this 1 hour time frame, it's triggered. Would have triggered long here, having been short for 2 or 3 days. So it's gone long here on this intraday time frame. But 15,850 is a key sort of pivot area through here, and then 15,900 is this top range through here. There we are, 15,900 up there. So again, depending on your time frame, Forex Signal Live or Forex Live Signal, that's where we are. We triggered longer this morning, and we've held on to our gains thus far on the DAX. Please check gold, says Gibby. Emmanuel says, please check gold on the 4 hour. Where has he gone? There he is. So let's have a look at gold, everybody's favorite trading asset. Well, it seems to be on here at least. There's certain something about gold, isn't there? Everybody seems to. That's the wrong. It's not here. Go back to my default profiles. So we got some gringos asking about dollar CAD. We'll get to that, gringo, my friend. Emily, we'll get to euro yen. Euro's bid across the board. I think I put a thing on Facebook earlier, didn't I? So where are we? Gold. There's a volatility. That's the 5-minute chart. So we were up, we were down. But on the higher time frames, 4 hour, Emmanuel, the gold market remains sort of range bound. We can't break that key 2000 level. It's a big, obviously, psychological level. You can see here from the decline we had at 2040 here on the 13th, 14th of April. We declined very significantly into this 1970 level, and that's where the 200 period moving average sits now. There we are, 1970, that golden line there, that big support level. We're obviously significantly above that at the moment, at just under 1990 at the moment, but you can see dollars bid on that news. The 4 hour just can't break and hold that 2000 level. So sellers coming in at 2000. Zoom it up. Sellers coming in at 2000. And this is where we are now. This 1990 level here on this 4-hour time frame has been a bit of a support area, hasn't it? So as we're a bit, it's a big full body down candle. So that's pressuring the next line. My next line on this particular chart is there at 1981 on 1981.50. Then we got 1975, and then there's that 1970 level. So 3 key levels below that to if this break out of this area, this candle here. Remember when you're trading time, if you're saying you're trading this time frame manual, you can't make a decision on this candle until it's complete, and there's still 20 minutes to go. So it's looking pretty good to, looking to break lower, but you've got to wait till the candle's complete before you can make a decision on it. But we've had a tick up from a test into this 1980, this low here, 1985 level. Excuse me, we rallied $15 into 2000, couldn't hold it and moved back down. So far, the 4-hour is down. The day or range band, the daily remains relatively negative, having broken under its 20 period moving average here on the 21st. But then it's retraced a wee bit. But again, it's still capped. You see it capped by that 20,000. So we've had a really good strong run and trend. So at the moment, we're waiting for new direction. We're waiting for what's going to happen next to put here on the daily time frame. The 21 EMA is providing some sort of support around where we are now, around about 1885, 1890 zone up on the higher time frames. And there's that 1980 level and then 1970 level as support to the downside. So 4-hour, exactly, you see the range exaggerated over more candles, but see when this one finishes, but it's sort of ticking to the downside. Okay, for a 4-hour. Gringo's asking about the dollar CAD. Dollar CAD both got jobs data next Friday. It's been tripping higher with the stronger dollar against the weaker Canadian dollar, with the big collapse we've had in the oil price impacting the Canadian dollar more than the US dollar. So 136 was breached on Tuesday. We held it yesterday, and we're still above it this morning or today at 136.40. So that trend looks pretty intact here on the 1-hour time frame. Obviously, 136 is our big support. Yesterday's highs took us up here to 136.50. So that 50 pip range was complete, and then we've been trolling between the two. So we're at 136.35 at the moment, in the upper half of that range, but we're still very much range bound, with 36 being the key support. What's the trending indicator tell us? Well, the Dow, the MACD signal line is declining, but it's flattening out. There's a horrible setting on the stocks, so that's probably why that hasn't moved around a bit. RSI 54 not going anywhere, and stochastics right in the middle of its range as well. So it's a real range bound between 136, 136.50 for dollar CAD Gringo. I don't know what time frame you're looking at, but if we go up to the higher time frames, the daily remains well bid. Big strong uptrend from the break here on the 21st, as we pointed out earlier. Big follow through here on Tuesday. Took us over that 136. And 136.50 is the next upside target for dollar CAD, but it remains bid. Remember the gap, the gap in the oil market has been filled now. The US oil took us down to under $74 or to $74. So that's filled that gap. So is there any more legs in this? Well, we came down quite steadily. Looks like that needs a bit of a retrace on this big leg up at the moment, but 136 is holding so far. 136.50 next upside target. Emily, good morning to you. Hope you're well. Euro yen it remains bid here on an intraday basis into 140 on yesterday. We tested it again on Tuesday, went to 145 on Tuesday, came back to 140 yesterday, and we're bid again this morning from yesterday's quite strong close, retraced, and that's been long 147.45 at the moment. So 148 has already been tested today, I think. By the looks of things, there's 148.52. Yeah, so we're well over, what am I talking about? Well over 148. 148's there. So there we are. There's that resistance 148 level from, wow, that's the daily time frame. Sorry, I thought it was the intraday time frame. No, that's the daily time. So that takes all the way back to October 2022. Excuse me. So that is very much bid on an end of day basis. 145, significant breach, and 146 is where the 21 EMA sits at the moment as well. So that is a strong uptrend. 148 has proved a bit of a sticking point at the moment. We trade at 147.45. So again, Emily, bid on the daily, quite strong. The 4 hour, there's that running out of steam at 148, up, retrace down, and the 1 hour should look a bit sticky as well. Yeah, big down move on Tuesday from the breach of 148. Bounced again yesterday, and again, it's big volatile candle. So that on the 1 hour, that went short here at 2 o'clock an hour or so ago, and remains short on an intraday basis. Next level you want to be looking at, or potential level, the lows from yesterday down there, the lows from Tuesday took us down to there. There's a lot of sort of clear space down here, so it's bouncing around quite significant, but certainly it triggered short there at 2 o'clock. The ATR at that time would have been 0.222, so 0.44 is times 2 the ATR to 47.50, so you want to get to 47. It hasn't quite got to 47 yet. We went to 47.13, so that would be looking, it's obviously perhaps finding some support down there, but your stop loss on triggering that, needs to be again on the move. Remember, it's been quite moving. It's round about there. So again, if you're doing a risk reward from entry to stop loss, it needs to be at least there. That's 468 points or 0.32%. 468 points. Yeah, there's that takes us to that 147.00 is where you'd be looking to get at least to, but it's short. Hang in there a wee bit. Leave your stop loss up there if you're on that 1 hour time frame and see how that plays out. Hello. Gold, yeah, let's leave the gold chart on because a lot of you like the gold. There we are. That sort of ranging gold market on the 4 hour. The 1 hour has moved down on the stronger data for the US dollar. 1986.45. We tested at 1981. Interestingly, to the downside. Emily, good morning. Yes, and there's the gold. There's the gold. Yoli, hello. Indicators trader. There's indicator. This is a trend following setup here, Bagwell, my friend. Euro asks Olamu. Euro, as I said, had weakened on the strong US data. This is the hourly chart, but it remains bid on the higher time frames. So be careful taking shorts, but certainly intraday it would have. It would have triggered short here on this 1 hour time frame earlier on today at 12 o'clock or 1 o'clock, and it continues to move to the downside. Depends if you'd moved you were still holding this ahead of the date, or you moved your stop loss or something, but you might have been stopped out if you had stop loss a wee bit too close. But it is short, 110.20. Obviously, 110 could be tested later on today. Remember, we've got pending home sales still to come today out the US. And with that relatively strong set of data, see what the home sales is like. And we got some more manufacturing activity from, I think it's Kansas later on today as well. So Euro intraday triggered lower this afternoon, having moved higher this morning. But again, you're very much against the higher time frame trend. When I say that, look at this. This is the daily. It's still bid. We're having a cooling day today compared to, the big uptrend we're in. And big support sits there at the 20-day moving average around about 109.40. So, be careful taking these intraday shorts. I don't know what sort of time frame you're trading. Tanisha, Good morning to Jamaica. I like Jamaica. It gets a bad press about a lot of things, but they're great. Bob Marley, and I've been on holiday there a few times. Great people. So I hope you're trading well, Tanisha. Anything I can help you with, please let me know. Jebeng, hello. Next up. Longwako. I haven't got that. I don't know if I've got Rand against Bitcoin, I'm afraid, my friend, on this particular workstation I'm on currently. Let me just check. Pretty sure I haven't. Cryptos, Bitcoin. No, I can't do you Bitcoin. Rand. If you're interested in Bitcoin and the Rand, Longwedo, let me know. Okay, I'd certainly show you the Rand if that's of interest. Rand here on the. This is a. The candles here are Heiken-Ashi candles. Okay, it looks similar to normal candles, but they're different. I like the clarity and simplicity of them. Here on a daily basis, we've got big support at 1800. We can't get over 18500 at the moment for April. But we are biased to the upside. We've had 3-4 positive days for dollar against the Rand. And we're currently trading at 1825, 700, 1825, 800. So that's biased to the upside on this particular chart with this support here provided by the 49-day period moving average. This is the 13-period moving average, this brown one. And this one is the 49-period moving average. Just happens to be what this chart is set up. Okay, so we're biased to the upside on that one. Gold, we just had a look at. Again, well, we can come back to gold, obviously. Gold update. We looked at gold. Evans. Why is the effect on this euro dollar? What effect? The news. Well, the news, Evans, has been obviously dollar positive. So let's have a look. But remember, tonight we've got the first of the big banks, the Bank of Japan, with their announcements. It's the first time the new governor of the Bank of Japan, Professor Udia, will have something to say about what's going on. So that's happening, in the Asian session. I'm saying tonight my time. But so yen has been under a bit of pressure from that. So let's just go back to. And then obviously again, if you're trading this on a shorter time frame, obviously the dollar's has benefited from the move on the data. So dollar yen, as you can see, moving back up, went to test 134, didn't want to hold it, and it's come back down here on an intraday basis. So that's a relatively positive, news announcement. But again, if you look at the daily time frame here ahead of the Bank of Japan tonight and the Central Bank of America, the Fed, FOMC, next week, we've ran out of steam on the rally in April at 135 through 134 and down to test 133 in April. So we're sort of at the bottom, sort of halfway between that 135 high and the 134 low here at 134. So we're exactly halfway between. So we're looking for some direction on that. There is anticipation, perhaps markets tend to get ahead of themselves, that there will be some change from the ultra accommodative policy. There will be some change in the yield curve control that characterized the previous governor's reign, and that will inevitably be some change from Mr. Udia, just because profile people are different. They have different views. That's why he's been brought in. But it's not as bullish as for the yen as many people first thought when he got announced. He will continue, and it's not in the philosophy really of central banks, and certainly not in the outlook of most Japanese people in the psychology where Japan as a society works and as an economy works for things to move quickly. So if there will be a change, it'll be a gradual change. April is the first month of the new financial year in Japan, so things won't change quickly, but there may be some tweaks. People were perhaps expecting some tweaks tonight in the announcement. We'll see. But from what he said previously, Mr. Udia, it doesn't look like it. So dollar yen 134, exactly halfway between 133 support and 135 top for April for dollar yen. So Evans, I don't know what time frame you're trading it, but certainly it's on the upside today. It's a white candle today from 2 down days. The 1 hour, there we go. You see the there we go. The volatility of the move down ahead of the news and retraced all of that and more as the news broke this morning, just now. So a lot of you asking about gold. Let's go back to gold again. ABEAJE, that's a great handle, I think. Gold handle. So gold to the downside. There's that 180, 140 level I was talking about before, 181 being tested. So dollar bid, as you can clearly see on the data, that big rejection of the 2000 level. So moving to the downside. Obviously, if you're short a time frame, it looks even more exciting or more aggressive. There's that 15-minute, the 5-minute as the news came out. Lots of volatility, but will continue to move down since then. May find some support at, as I say, 1880. Gringo, Gringo. I was looking at 1 hour, little break at 36, looking for a retrace soon. Yeah, sorry, Gringo. You are talking about, what did you ask about? They all come in. All right. Lots of people start to check. Gringo, where were you? You were right near the top, weren't you? Bear with me a second, my friend. I can't remember what we were talking about. They're all just charts to me, you see, Gringo, and I can't remember what lots of individuals are asking about. So let me just find your question. Where have you gone? I thought you were up here. I thought you were early on. Sure you were. Where have you gone? I've lost you. Oh no, dollar CAD, 130. Yes, exactly. So yeah, sorry, Gringo. That's everybody else thinks we're talking mad. Yeah, there's that 136 breach, and it was a significant one. Remember, Gringo, the size of the candle matters, and that doesn't matter whatever you're trading. But that was it's been a big positive rally, and it was a big positive candle on Tuesday as the oil price unwound. There's been a note today. The EIA blaming OPEC blaming EIA for the production issues, or companies and countries not investing in their oil production because of they're blaming the EIA. So a bit of a fallout between those two organisations in the very highly sensitive geopolitical world that is the oil market. So, but that was a big, strong move. Obviously, as you say, 136.50 to take this higher. Absolutely. Well, that's answered your question. Where was I? Yeah, Gringo. Hello. Somebody's trying to spam me. Hang on a minute. Where did I get to? 136. Next up. Just why put a line at each moving average? Gislin, I don't put a line at each movement. These lines are there, and it probably needs clearing out. It's because it gives you the horizontal line of where the moving average is. Remember, horizontal lines tend to have bigger support levels than trending lines, sloping lines. It's just the nature of mathematics. So the more the line is in a line, but they tend to be zones, support zones. So that's just how I work, Gislin. Okay. All right, next question. Is the notion of crossover also valid on the changing trends contained in different indicators that are present? Absolutely, and that's how this particular setup works. This particular moving average crossing setup works. And there's lots of different moving averages. There's lots of different crossing moving averages setups. There's hundreds, if not, I won't say there's thousands, certainly hundreds. This particular setup, the one you can see here in front of me, is the 5-period exponential moving average, which is the one that's always closest to the price action because it's the lowest count back. It's only counting 5 candles. This happens to be 5 daily candles. If this was the 5-minute chart, this would be, this is 5-minute candles. So it's all relevant to the count back. Let's just go back to the daily chart. So that's the blue. The yellow is the 9 period, so it counts back more. And the 21, this magenta line here, is the slow moving average. So this should and is always furthest away from the price action. So when the 5 crosses the yellow here. The blue crosses the yellow, the 5 crosses the 9. That's a first indication that this trend, this downtrend here, we've had here, may be coming into an end according to this particular chart setup. I'm not saying this is the best on the bee's knees. It's not. But, this is all free, guys. Let's be fair. And then what we're waiting for, so that's our first wake-up call here on the 20th when the blue crossed the yellow. So we'd had a big positive day the day before. If you're only using 2 moving averages, they'd crossed or had gone over the 9 period there. You could have got in there. But it was different horses for courses. But the entry on an end of day basis on this particular dollar CAD range would have happened here on the 21st, a week or so ago, around about 135. If you got in on close out 135.37, and you've been long ever since. And trail your stop loss up. Stop loss would have been down here on the turn. Moved it up a wee bit now, probably around about where you got in. I'd say I wouldn't get it any much closer. And it's just the way it's set up, isn't it? If you want actual more detail on trading this particular setup, Jazane, watch the Crossing Moving Average webinar on our website, my friend. Okay. Please don't me go this time buy, sell. I'm not going to tell you to buy or sell. I'm not allowed to tell you to buy or sell, Bilal. And anybody you see on Facebook, YouTube, or working for a broker that tells you what to do, buying or selling, be very, very careful. Be very, very skeptical. Understand what's going on. Gold, as I say, depending on your time frame, is either in a big downtrend because of the news here on the 5-minute chart, or if you're in the 4-hour time frame, it's going sideways, but still biased to the downside. That 4-hour candle is now closed. It's negative. It's closed below where we were earlier this week, just marginally. It's tested that low again, that 1981.40 level we've got on our chart here. The next level below that is 1975, and then the 200-hour there at 1969.57 round number. So that's negative. That's a negative candle. We've got big resistance at 2000. It's not trending because the moving averages are moving sideways. It's biased to the downside because it's under the 50 period and the 21 period. The 50 period is moving down. They're in alignment. We've got the 50 period, the 21 period. So I'm saying take a short position on that, but it's biased to the downside. It's all about the time frame you're trading, Zohal, my friend. So find that. Don't just jump in just because some news has moved something. Be very, very careful. Let's just hide that nonsense. Hide it. Emily, Aussie. Emily, what's your time? What's your trading time frame? So you're in early, weren't you? What are you saying, Emily? 1 hour euro yen. So 1 hour on the Aussie dollar. I'm going to guess, Emily. Let's have a look. So Aussie dollar again downtrend under .67, under that pivot area we talked about before, that 66.66. We'd mentioned 66.30 as well. I remember last week moved. And we're under now .66 yesterday. So this looks weak. The Aussie looks generally weak against many currencies, to be honest. So trending lower. Remember, we've got the RBA as well next week. Everybody forgets the RBA sometimes, but RBA. So we got the Bank of Japan tonight. We got the RBA Tuesday night. We got the Fed, the most important one of all, next Wednesday, the 3rd of May. And then we got the ECB on Thursday. So lots going on. Obviously, we got the end of the month. We got non-farm payroll the end of next Friday. We got the beginning of the new month. Lots of markets will be closed on Monday as well. It's International Labour Day, May the 1st. So be careful trading on markets that where there's little volatility. So hopefully, Emily, you can see that's that 1 hour chart. There's those levels we've had before, and there we are playing around with them. So we're range bound between 66.35 at the top here, which is identified as the trend was moving down, and we got support here at the big round psychological 66. So as a trend on an intraday basis, Emily, that's not doing anything. There'll be buys at 66 or just below it, as it was yesterday by the looks of things, and sellers before it gets to 66.35, so 66.20 by the looks of things. But the bias again remains to the downside. So taking long positions, be careful because there's the downtrend over the last week or so, very much to the downside. And again, another one that was going sideways, but last move was here. Again on the 21st, took us lower from 66.85, and we've been 5 days now below the 20-day moving average, and we've broken out under the 66.33, that level we talked before, and then the next target to the downside is at .6570. So if 66.000 breaks, Emily, 65.70 is where you want to be targeting. And we found some support, though. We found some significant support down there at 65.70 back at the beginning of March, but that's still biased to the downside, as is a lot of the Aussie crosses. But I'm assuming you're trading on a 1 hour time frame, and we're sort of going sideways yesterday and today. But break of 66, we'll bring in that 65.70 level. There we are. But it doesn't want to do that at the moment, does it? So we're calm, we're cooling, having been having been short. It triggered short there actually in the last hour on the stronger dollar data day. Okay, so that's. Where's Emily gone? There we are. Okay, so Ephraim. So where are we going to get an update about Asian session? Are you going to be live, or there is any platform that can be? Ephraim, are you are you talking about the Asian session? Well, obviously my working day is the London working day. So we have obviously we got obviously multiple languages in the Asian session, and I have multiple colleagues in Indonesia, in Malaysia, in Vietnam, in the Philippines that can do these sort of things as well. I'm not sure what they're up to be honest, but certainly, yes, the guys are there. So join them on their webinars. Join them on their. So check out, HFM Indonesia. Check out HFM Malaysia, wherever you are, Ephraim. I don't know where you are in the world, but certainly, Japan, Singapore, wherever you are, check out the guys there as well. Follow-up question: can you help us with daily setups and trading signal suggestions? Absolutely. I'm a trend following sort of guy. I always have been. So that's why I like moving averages. Lots of people, tend to be lots of younger people, tend to hate moving average because they're slow and they're sort of lagging. Yes, they're lagging, but that's the nature of what they are. But I'm waiting for something to happen. I'm not interested really in things going sideways. Lots of people are happy to do that. But, even on, this setup, you can trade. It's all about, Ephraim, it's all about having rules. This particular setup, that's the hourly setup. So you can see here, this asset happens to be the Aussie dollar. It doesn't matter what the asset is. So today, there's no direction on the 1 hour time frame. The 4 hour time frame is still down. It's retraced a wee bit in the last few candles, but it's still negative. It's still under 66.33, where that 21 moving average is. The daily, as we just said, is still down. So the trend is down. The higher time frame daily is down. The 4 hour remains down, although it's retraced. And the 1 hour is not doing anything. It's sort of gone up and then gone back down. So it's sort of range band. So if you're going to trade this, the 15-minute time frame, you want to bear that in mind. So you want to be looking, biased to the downside, I would argue. Obviously, this is today, and it's been sort of moving up today, if anything, hasn't it, into that 66.33 level. Then it went short, then it went up, didn't last. There's the news, taking it lower, and it sort of bounced because it doesn't want to go down to 66. So it's all about horses for courses. But again, as a trend-following trader, yes, it moved up a wee bit this morning in the Asian session. If you're talking about the Asian session, Ephraim, so you should have been trading this long this morning. Again, it's and again, depends how you do it. What you want to be doing, Ephraim, if you're coming in to trade the Asian session. Let me zoom out. So if you came in at midnight, let's say you start trading around 1 o'clock, 2 o'clock in the morning. What's happened? So if you're trading intraday, what you want to be doing is have your pivot points on. There aren't pivot points on it, or you could do it manually. So yesterday, So what you'd want to do perhaps is mark on, well, that was yesterday's high up here at 66.38. This was yesterday's low at 65.91. So we went under 66 yesterday. And then, as you come in, what we bias? Well, here on this 15-minute time frame, we've opened quite positive. So I've been long, got out, got long. So I'm biased to the upside because on this particular time frame, given that that's our range, this is our low from yesterday. So we're off that low from yesterday. Obviously, the high from yesterday is up there. So that's exactly what we did today. We rallied from the low of yesterday. We tested into the high of yesterday, which actually breached that key higher time frame resistance at 66.35 level, 63. And then it's declined from there. So we've been short here. We'd have gone short there. Short. Stopped out for a flat on the head of the news. And, be careful trading it ahead of the news. So I would have been out waiting for direction. So now, again, I would have waited till the news has come out. My candle is completed. It's the biggest candle of the day, unsurprisingly, because it's the biggest news release of the day, those 3 big bits of US news. And now I'm short. Yes, it's retraced against me at the moment, but I'm still short because my stop loss would be probably up here on that time frame. I'm short here, so it's a big ask to perhaps move it back to 66. So, is that going to happen? Well, I don't know. What am I trading? I'm trading the Aussie dollar against the US dollar. Well, the Americans are awake, but the Australians are asleep. Is that a good pair to be trading now? I don't know. How much does this move? Well, it moves my ATR down here. Here on a 15-minute basis, it only typically moves 7 cents. You can see that down there. That's a 7. I don't even see that from. So it's all about building up, your approach. And I can show you all different types of approaches. I can show you trending approaches. I can show you mean reverting approach. I can show you Bollinger Bands. I can show you price action on 5 minutes charts. We can, all sorts of different charts. But the problem most traders have is they don't have the discipline and the patience to execute and stick to their plan. Okay, so yeah. HFM, as far as daily setups are concerned, on our website, every single day, excuse me, every single day on our analysis page, so HFM analysis, which you find, this is the calendar we were looking at before. But if you go into the education tab, we're tidying all this up, guys, in the next few weeks or so. We're getting rid of, I think it's 1, 2, 3, 4, 5, 6, 7, 8, 9 tabs. We're reducing this to 5, so the new website's being launched as well. But under the education tab is our analysis, where we, as technical analysts, write all our stuff. So under the analysis page here, every single day, if you're talking about daily setups, we publish the current market trends. And what this shows you, Ephraim, and everybody else for that matter, is what's going on on an end of day basis. So these are 42 key assets. 42 is a number very key to my heart. If you know me at all, you'll know. I'm not going to explain why. If you don't know, look up 42. It's a very significant number. Certainly is for me and my child of the 80s. But these are 42 assets, Forex, the 24 big Forex crosses, obviously the major currencies. There's commodities in here, there's indices, there's cryptos as well. So that's got our 42. So what's this chart is showing you, Ephraim, is how far and how many days from the key 20-day moving average, that magenta line on here, is this particular asset either above or below. Well, here the first one, the Aussie CAD is under its 20-day moving average, but it's only been doing it for 2 days. Some of them are in really, really long trends. If we look at the Euro, New Zealand, for instance, 62 days it's been above its 20-day moving average. So that's a trending market. The strength of the trend is something else, but it's 62 days above the 20-day moving average. So, if that's what you want to set up, that's, you've got to have have an approach, Ephraim. Obviously, you're going to trade on the end of day trades. Your stop losses are bigger, your targets are bigger, but your obviously your targets, your rewards are bigger. It's all about how we trade. Okay. Gringo, dollar CAD. Sorry, you were talking about before. We did find it in gold, and everybody suddenly stopped talking to me I must have upset people, have I? I don't know. Oh, people have just disappeared. I don't know many of you are still here. Gold. Gold. It's just, I guess there's just the 4 hour, 15-minute remains to the downside. So we had the big shock of the news, dollar bid, bit of a retrace, down again. There's that, but it doesn't want to break the key, this 1881 level here on the 15-minute. If we've got the 5-minute, again, there's my 81, much further away. So that's key support, 81, 450. Still biased to the downside. Triggered, well, it's been short. Again, looking at this, this had been short here on the 5-minute before the news. It's sort of weak break here. You want to wait for a bigger move. There's the initial news. So you'd short there. It's moved down. You're still short here on the 5-minute time frame on the gold chart. Okay, Junior, is there any? You must have just joined us, Junior. We were talking about the Aussie before with Emily. The Aussie is generally under pressure. Remember, we've got the RBA with their rate announcement next Tuesday ahead of the FOMC on Wednesday and the ECB on Thursday. So it's a big big week of trading coming up as we come to the end of the month of April and we move into May. To the central banks. Interesting, nobody's asked about stocks. Does anybody trade stocks, guys? I mean, it's getting more and more popular. Certainly how I started out. Tashina, my account don't proved yet. Well, Tanshina, come onto the website, ask the support guys. There's usually an issue with your, I don't know, whether you've given an ID or a passport or whatever it is to prove your ID, and then you got to prove your Tanisha, you got to then prove your residency as well. So it's happening really, really quickly. And again, I mentioned about the website changing. That's part of some of the changes that we've got coming through quite quickly as well. So watch this space, my friends. So let me just close that. So let me just check the start. There's with the news that's gone through pending home sales coming soon. So relatively strong data for the dollar. Tanisha, certainly you can to have a live account. You obviously need to put some deposit in there, Tanisha. But certainly have a play with it. And there's lots and lots of different setups. Watch our webinars again on our education tab here, where our analysis is. Go back, watch some of our webinars. These are all how-to webinars as well, how to set up your charts and stuff like that. Again, you want to decide the time frame you're trading. Are you a trend follower? Are you looking for the price to come back to the average, called mean reverting? So have a look at these how-to videos. This how to get going. That's the app. That's the MT4. How to load it. How to set up password, user's password. MT5, similar thing. There's animated videos. There's the e-course. There's all sorts of things to help you get going. If you want some more help, obviously either contact me here or contact us here. Come onto the support desk, support@hfm.com. They've got those guys are there all the time. They're really, really helpful. Multiple languages as well. So do check it out. We're here to help. So there we go. We've breached that 181. All you gold fans, we've breached that 1980. Let me get rid of that. That 1980 level, although briefly, but 1980, 25. There we are. We're under that 1981 level. So again, trending lower here on the 5-minute chart, gold traders. So sorry, Harry, you were asking about, not Harry. Yes, Harry. What is the direction on the Aussie? So let's go back to the Aussie on the 1 hour time frame. Well, it was a bit negative given that the the data for the dollar was strong. So we got the Aussie dollar to the downside. And again, it's testing that that range we talked about with Emily earlier. The range here, 66.35 has been our top today. 66, big round number, the support, but it's heading into it. So the dollar is continuing to strengthen. We're 10 minutes again, remember, before the live cash open. So that's going to make a difference as well sometimes. So let me just, so that's testing. There we go. It looks like we're going to test 66 itself. So that's down, having been short and then stopped out here. But, you're with the trend, remember, being short, because the 4-hour trend is very much to the downside. The daily trend is very much to the downside, again, from the 21st here. So, 1, 2, 3, 4. We're into our 5th day lower for the Aussie dollar. But we are, levels you want to be looking at, as I said to Emily later on. If we look to the left here, we went all the way down to 65.70 here, sort of early March, having had a big down day, but that was the floor, and then it rallied a wee bit. Tried to go up over 67.80, didn't break it here into the end of March. Tried it again here in the middle of April, didn't break the 67.80, came down from it, and now we're down on the flip side, having broken 67.50, broken 66 as well here to the downside by the looks of things, but we're into a support area. So the direction on the 1-hour time frame remains with the higher time frame, Junior. So, probability is on your side. However, caveat is, this candle is testing a big round psychological level at .66000. So there we go. So Tanisha, when you open your live account, Tanisha, it will come with some default setup, so you can add and take away indicators as and when you want them. Ephraim, I learned about from you. Can you be my mentor, please? Ephraim, just keep in touch. Join me on, follow me on Twitter. Follow me on Facebook. Twitter is at HF_analysis. Okay, that's my Twitter account. At HF_analysis. You want to follow me on Twitter? I put a lot of stuff on there. There's lots of really good free advice up on Twitter. Really, lots of really nice guys up on Twitter, honestly. Facebook page, that's Facebook page. It's Stuart Cowell. Not my personal one, I won't add you, but my company one here. And I'm sticking stuff on all the time. There we are. Goldman, that's the last thing I put on. Goldman Sachs raises forecast for the Bank of England to peak at 5%. That's obviously benefited sterling today. All that sort of stuff. There we go. There's my thing about the euro. There we are. I thought I'd put it somewhere. Euro remains broadly on bid mode. Bid means it's up. So you see these are all euro. The 7 euro pairs. Euro's the first pair in all of those, and then you can see they're all moving up, except against obviously pound. But that's So get on there, my friend. I'm happy to help, Ephraim. Okay, Ghislaine, can you use Fibonacci to analyze this pair? You can use Fibonacci, of course you can use Fibonacci on any pair, on any asset. However, the trick with Fibonacci, particularly the simplest approach, the retracement level or retracement levels, Ghislaine, is the trend needs to have ended. You can't put your Fibonacci level on and expect a retrace if the trend hasn't ended. So the last leg, as we call it, on a movement here on this 1-hour time frame for the Australian dollar is, that's a big move down, isn't it? So that would what you'd be looking at. So what you would do here would put from the 67 level all the way down to this 66 level, or 65.90, which is where the candles stopped on this 1-hour time frame. And that's what you're looking at. And look, as if by magic, the 33.8 1-hour Fibonacci level coincides with a key level we'd had from a few weeks ago, the 66.33 level. The 50 level is up there at 66.45, and the 61, the key Fibonacci retracement level on this leg down here for the last 2 days, takes us back to that other key level we'd had on there, 0.6666. I didn't make that up. It just happened that way. Okay, so that's but it's not a we don't know, honestly, Ephraim. We don't. Sorry, Ghislaine. We don't know that trend has finished, do we? Yes, it's bounced today, but it could come back here, and so this trend low. So like yesterday, we'd have had, or day before yesterday, that would have been our retrace level. But yesterday, then we went down, so it's extended that. So, and the higher the time frame that you use, any of these indicators, the more significant the levels are. So let me just delete that fib level. Delete, close. So if we go up to the daily time frame, so that's a bit more direct. So you can clearly see that that's the level it went then and then. But we don't know that that's the floor because we don't know it's finished. So that's the only way you can put a Fibonacci level on. You want something a bit more chopping around a bit, and then you can see the legs in it. So there you can see, so there would be a leg there, bit of retrace. So the 4 hour looks like that might have run off. So watch the webinars on how to use the Fibonacci retracement level, Ghislaine, and use them on the time frames that you want to trade. In Zimbabwe, Ephraim, that's okay. Ephraim, we got partners and support people in Zimbabwe. Obviously, we got our office next door in South Africa. We got a big conference expo we're going to with lots of other brokers and lots of speakers next month, at the beginning of May, in the Sandon Conference Centre in Johannesburg. So if you can get to Johannesburg, come and join us, meet us there. Ephraim, if you can. Ephraim, I should say. Sorry. Gibby, just blew my account on gold. Okay, well, I'm sorry about that. But as with any trading, Gibby, and as with anybody, it's really about, presumably, I don't know, were you long or did you go long when it went down? I don't know how you trade it. Were you trading with enough margin? Were you trading with leverage that's too high? I don't know. You've got to, find a system, find a strategy that works for you. Were you trying to grab the bottom? Do you think it was going to bounce because of the news? Or did you get taken out on the volatility of the news? That's the other thing. When you've got open positions, when the news is coming out, you've got to be careful because you do get this natural volatility on news. Because all markets are doing, remember, are trying to bring different belief patterns together. So some people think it's going to go up, some people think it's going to go down. The price is the price. Some people buy it, some people sell it at exactly the same price, and that's all a market is. At the moment, clearly here on this 5-minute time frame for gold, the bias is to the downside because we are trending down. The moving averages are, well, you can't see that, can you? You can only see me. Sorry about that. The moving averages are moving down since the news went out, but you see the volatility to the downside. So Gibby, success in trading is principally understanding yourself and managing your risk, understanding what you're doing, understanding the lot size that you trade, understand if you're going to trade gold, understand the spread, understand the seasonality of it as well, because there's distinct seasons in the year for gold to be relatively strong, gold to be relatively weak. So be careful about going against that trend as well. It hasn't, but again, having said all that, it hasn't really seen the bid it should have done with all this worry about inflation. But $2,000 for gold is still a relatively high level in historical terms. So, I hope you can live to fight another day, Gibby. And understand, have a stop loss and get out when it's wrong. And when you lose, you should only be losing a small amount of your account. Keep your losing trades small. It's a very, very old adage, but it's very, very true. What's your opinion about next Fed meeting next week? Excuse me. It doesn't matter what my opinion is. I'll give you it anyway. I think they will go 25 basis points. So does the majority of the market, and that's absolutely nailed on. A good way of knowing what the futures market is doing is this site here. I don't know, the CMC. And again, I'm showing you all three places here that you don't have to pay for. But the Fed Watch tool on the CME group here, you can see it's only 6 days away. This is the likelihood of rate hike. So what this is telling us here with for the third of May meeting, there's a 87.4% chance of a 25 basis point hike. This is the rate they're going to put it up to 5 to 5.25, and now only a 12.6% chance from 27% yesterday. See how it moves very, very quickly. It can flip around. So we're back to the Fed putting rates up. It's okay. So it's see, it's currently in the 4.75 to 5%, and they're looking to move it up 25 basis points from 475 to 525. So that's what the market is looking for. No change there. So there we go. Where am I? I'm here. Right. Alex, good afternoon. Alassa, the spread. I love HFM, but the issues with the spread on the macro account is too much. I don't know what you mean, Olu, compared to what? I mean, I don't know what time frame you're trading. You can see the spread here. This is gold, guys. That's what those two lines are. That's as tight as you get. This is the 5-minute chart, 81. Now you can see that literally, and this is a demo account as well. So this particular, there you can see that I've got the bid and the ask line on there. See the two lines on it. See how tight it is. I'll ask you again. We are watch the website next week. There's maybe might be something you do, but I don't know what to say, my friend. The spread is the spread. The spread is it's deemed by the market. It's not something that we do in that sense. It's all to do with how many people are in the market, how many people are trading, the volume of trading. Obviously, the different liquidity providers are offering different prices at different times of the day. But there you can see that's even down here on the 5-minute time frame. Look how tight the spread is on the gold chart there. It's right, very, very tight. So I don't know what you're trading or when you're trading. So be careful again the time of the day that you're trading, Olosu. But I'm going to guess you're in Africa. But you should be. Your day is the London day, and that is the tightest time of the day. We're in the tightest spreads of the day as well now because the US market's open. And let's have a look at the open moves actually. How have we done this? Go back to a white chart here. Those of you that don't like the white background, I apologise, but. This is the Dow. This is the 5-minute chart. This is the 20. This is again one of my favorite indicators, the 21 EMA. So it's been bid all morning. We've just opened to the upside by the looks of things. What time is it? Yeah, literally, this is the opening 5 minutes. So there's the 5-minute candle. It's at the top, so it's opening down actually here, having rallied most of the day again. So we're above the pre-market high. No, we're not. Actually, that's looking like that might be turning low, but we'll see how it settles down. But certainly see how the ATI is rising. We've been right. We're starting to move here. Well, that's the Nasdaq on the 5-minute time frame. Nasdaq finished positive yesterday. What have I done with that chart? Didn't mean to do that. No, it is. So that's the Nasdaq opening lower. So again, what I tend to do here if I'm going to trade this on an intraday basis, that's the low of the day was down here at 12.86. Can you see that on the chart, guys? That's 12.86. The high of before we opened here was literally 5 minutes before we opened. So 12.968 was our high, and we've turned down, but we're we've rallied, supported. So see if this 21 holds in that first 5 minutes. But that's a relatively big down candle. But now's the cash market. It's opening. You can see if I move that. See how the volume's picked up because it's the live market. See how flat the volume is. These are volume candles here. I'd say only 5 minutes, but there's the range pre-market 12.86. Pre-market high 12.69, and it's sort of looking like it maybe want to tick lower, although we're biased up, so we'll see what happens. Looks like a bit between the top, so it might be worth a short on that, but we'll see how that goes there. And that's the Nasdaq on the 5-minute time frame. So I'm gonna go, guys, because I've got lots to do still today. If there's no more questions, any other charts anybody wants to have a look at, let's leave. I know everybody's been talking about gold, so let's have a look at gold on the opening. So again, this is gold for today. It's been relatively long. There's that 2,000 level we looked at on our black charts. Oops, I don't want to. Gibby, I don't know how you've been trading that, but this is the 10-minute. This is gold on a 10-minute time frame. But again, you could see clearly that didn't want to go up there. There's your take. You could. I don't know how you've traded it, but the short-term stochastic here, you can see is looking. It's in its oversold area, and this stochastic setting here is 10.63. I don't know if you can see that, Gibby, but 10.63 on the stochastic. Obviously, the stochastic is very choppy. First suggested, it turned around in the overbought area up here, so you might want it to be looking to be short there. See how that's correlated really nicely down that 10-minute time frame. We've got the stochastics crossing the K and the D line crossing. We've got the candle breaking back under 2,000, back under the 21 EMA. So that certainly would have been ahead, as I said earlier, ahead of the news if you want to trade it that way. And it's just moved down since. We didn't know that was going to happen, but what I'd have been looking for if I was trading this 10-minute time frame is a break of that low through there. Which see what happened there. We went into it 1996.75, bounced off it, then went. Last trigger short was this one, wasn't it? Having gone long, looked like we were gonna. It stopped us out, so that's a losing trade there. That's short, but again, would you have taken that? I probably wouldn't have done. None. There's big news coming, but I would have been. Again, I would have been happy to have entered on the conclusion of that 10-minute candle. Obviously, I didn't know this was going to continue to happen, but it's a huge candle. It's, in the direction of, because of the news. The stochastic is somewhat irrelevant because of the news item, because it's bounced, it's exploded. So we've moved down. So again, I'd be looking for, we were talking about 1981, 1980 level, and we're still short. So my stop now would be round about my entry. So I've locked in some pips. Obviously, we're in the stochastic here is suggesting, we got overbought, so we might be, but at the moment we're still going down. We might be turning around, but we haven't crossed up. We crossed up and it failed. But it was a weak one, wasn't it? But now the K line is a long way into overbought, so there's clearly some support round about here. But we're at 1976 and we're still moving down, so I'd still be short. Okay. Abu Bakr, there isn't on this chart, and you see on a lot of my charts, is the 21 exponential moving average. If you're trading short time frames, okay, it's a bit of a pivot point. So anything above it, looking to go long. Anything below it, looking to go short. If the moving average isn't moving up or moving down, stay out really. So this is a weak sort of rally this morning. It got a bit better. We went the price. The further the price is away, it can be good, both good and bad. It gets too far away, it's too overstretched, and that's what's happened as it rallied into 2,000, and then it stalled. So it came back to the 21 moving average, moved again. Final bid today over 2,000, stalled around here at 2002, moved back down again here in the European session ahead of the news. The major news of the day, which is the US news, which is dollar positive, therefore gold has moved lower. And again, it's just whether people watching this chart, whether they're brave enough to have entered after a big candle. Lots of people, it's already gone low. It's already at the low of today. But that's the point. Look what happened as the news broke. The major news of the day took the gold price to the low of the day. So people saying, oh, well, that's the low of the day, so I'm going to buy it. Perhaps that's what Gibby did earlier. But no, because the candle is big, the momentum is with you. We've just breached below the 21 EMA here, 15 minutes, 20 minutes before the news. Obviously, it wasn't moving at that point, but by this point, that's interesting because it's at the low of this level we'd been in, and then that's low. So that's followed through in the last, 20, what's that? 1, 2, 3, 4, 5, 6, 7, the last hour and 10 minutes. On the break of the 21 EMA, Abu Bakr, again, I'm not saying this is a trading strategy, but, look to be short when it's under, look to be long when it's over. Okay? I mean, again, go back to the 5-minute time frame, it's a bit more decisive. So short here, out there, go long, but it's gone back against you. Shortish here. And okay. So that's my sort of pivot, if you like, but only if it's sloping. If it's flat, the flatter the moving average, the less use it is. Okay, there's lots and lots of strategies, Abu Bakr, my friend. So find one that works for you. The other one we've been looking at earlier today was this crossing moving average. So it uses 3 instead of just the 1. This one's quite a nice one as well. I'm going to leave you with this one before I go. This is 2 moving averages, but it combines a lot. This is something called the AMA, the adaptive moving average. Can you see that? The blue line. And that you have a setting on that of 9, 2, and 30. And then the red line, which is the TEMA, so it's a triple exponential moving average. So it does actually do what it says. It combines 3 moving averages into one single line. And it's set at 14 countback period. And again, they can be used. The red, you can see here, I don't know, what's this? This is euro on the 5-minute time frame. So short here, they've crossed down, they've gone down, down, down. It's under that's nice. So you might want to be thinking of getting out. Go long here because it's back over the 2 of them. They've crossed there, so add to your position, but then it moved down. Short here, short, short, short. Out, long, didn't work out. The news, obviously, this is before the news, but big move down on the news. It's euro, it's dollar positive. Euro dollar has therefore moved down, and that's what's happened ever since. So this is still, with this strategy, this is also moving lower. So it's all about trade. Have a strategy and follow the rules, basically. Okay, right, guys. I'm going to go. I've been here an hour, over an hour as usual. Talk too much, but the very best of luck. May the trades be with you. May the pips be with you, and I will see you all again next. I won't see you next week. Actually, I'm not here, so you'll see Andrea next week. So take care, trade carefully, and we'll see you all again soon. All the best, everyone. Bye-bye.